Hey everybody, this is Rob Keynes with the Freedom Report. This is being recorded on Thursday, the 22nd of 2026 at about noon, my time, Central Time. And today's video is going to be all about silver. I was actually going to do an economic report because I haven't done one of those in a while. And I was checking out the silver statistics and I found some interesting data you guys are going to want to take a look at. I think silver's going on a massive run. And when I say massive, I mean massive. It's being run. We're seeing stocks come out. Well, I'm just going to show you the data. I think silver's running right now, and it may run to 150 like I predicted, and it may go to 150 faster than I thought. And it may be on the final leg of its run to unobtainium and to where it's very hard to get. And I'm going to tell you what's happened literally overnight in terms of the supply chain in the US, in addition to giving you the data. Because as you guys know, I run a big gold and silver business in the US, and what my refiners and manufacturers are telling me is very, very interesting. So we're going to go to the data first, and then I'm going to give you the story about what's happening to physical 999 silver, and it's different than what was happening last week or just a few short days ago. This is big, 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 big news in silver. All right, here we go. So I'm just going to show you the price chart here on TradingView. I would show you the normal one that I normally give you on goldprice.org, but it's not showing up. I think so many people are hitting that site that the silver chart basically is not there. So this is, I'm sorry, Trading Economics. This is silver's price. This is just a daily chart, and you can see it's traded as low as 91. It's up to 96. So there's been a little bit of weakness in silver this week. It came down from about a high of about 93 and a half last week to about, I want to say about 88, 89, and then it's popped back up. In fact, let's look at the 1 week chart. What did it get down to? It got down to below 88. It got down to 87 and about 21 cents. And then in just the last couple of days, it's popped back up to 96.41 as we're looking at it right now. This is astounding. That's a almost $8 increase in the span of about a day and a half, 2 days. It's running hard, and I'm going to show you why it's running hard. And I was going to show you the long-term silver chart. I mean, before we get into the data, look at this. This is stupid. Okay, it was running $32 on March 25th, and it's a straight line up over the last several months with no major pullbacks. Now, that makes me nervous because from a technical perspective, you would expect there to be a pullback. Well, I don't, but there's not one. And up until this point, we had plenty of physical silver. I'll get to the physical silver in a moment. We may be starting to actually run out of freely available physical silver. And at first, it was just a refining problem. And I think there is silver still available. But I think worldwide, we're starting to run short on silver. All right, here's something that Craig at TF Metals posted on Twitter yesterday. And this was as of the 20th, earlier this week. That would have been Tuesday. He saw a net change right here on the right-hand side in the silver chart of an increase in open interest of 4,000 contracts. And if you pull this column down to here, 1,900 contracts were for March, which is the dominant month, because you can see 100,000 open interest. And then the next big month was May with 21,000 open interest. It added 851. And overall, across all of the coming months, because it's a futures market, so you're playing the futures price, an increase in 4,151 contracts. That typically means we're going to have a short increase in silver and a pull down in price. When you see that many contracts added in a day, it's usually short positioning, especially when you have a chart that looks like this. How many people are going to add 4,000 contracts on top of that? Because from a technical standpoint, you're cruising for a bruising, right? You're looking at it going, it's going to pull back at some point. We're going to lose our shirt. But it didn't. It increased 4,000 contracts, and that's not stopping the price. It's adding to the price. And this is a huge change from what we generally see in the silver market. Usually huge daily or weekly increases, excuse me, in the open interest are short volume on silver, not long. And we also have a change of 1291 today. If you look at the right-hand chart, 982 contracts in May. And here's the thing. These aren't just going on the near-term dominant contract of March. These are coming down to May, to July, and to September. People are taking more bullish positions on silver, not just in the near-term trading month, futures month of March. They're taking them and extending them out 7 to 8 months of trading. People are going long silver, and they're going long silver on a longer timeline. So not only is the long interest increasing in silver, which is spiking that spot price, but people are making bets that 6 to 9 months from now, silver is going to be higher. This is huge. This is very rarely, if ever, done on the silver market. I've been covering this for 16 years. Very rarely, if ever, have I seen that in silver. And this is also very interesting. You guys have seen this chart a bunch of times. I'm only going to look at silver. And typically, I'll tell you that the bullion banks are net short 46.1%. So almost half of the short interest is the bullion banks. We know it's the swap dealers because you go over here and you look at the numbers. But here's what's really interesting. Look at the net changes. Look at this net change line. You look at the producer merchants right here, and you come down to net changes, and they've dropped an overall of 2,200 contracts long and 2,200 short. What is the net of that? It's about the same because they're dropping some longs and they're dropping some shorts. So the producer merchants aren't moving up their short position or their long position in any reasonable amount. So it's not the producers or the merchants or what we call the legitimate market hedges, people that actually deal in the physical to supply their business or to sell it to people to supply the business. They're staying out of the price changes. It's not the producers, the miners, or the merchants like the Samsungs and Apples. It ain't them. It's the swap dealers and managed money. Look at the swap dealers and managed money. The swap dealers dropped almost 6,000 longs. It means they've reduced their long position by 6,000 contracts, and they reduced the short by 2,300. But they've reduced about 3,600 more longs than short. It means they increase their overall short position as a percentage. They're going overall more short, the swap dealers are. And they're rotating out of contracts. They're dropping both long and shorts, but they're taking a higher net short position as a percentage. And that matters because it's the net short position or the net long position which determines prices. Because if you come in somebody comes in hot and issues a bunch of short contracts to get someone to take the other side, it's going to draw down prices. Well, not only are the swap dealers or bullion banks doing it, but the managed money's doing it. They dropped 4,178 longs and only 2,148 shorts. For the first time in a long time, the managed money and the bullion banks are taking the same side of the trade and they're going net short. And guess what that's not doing? It's not stopping the price. You have both the financial side and the bullion bank side, the market makers, and the financial side, which are the financial houses that hold these for their portfolios, for their clients, pension money, whatever kind of money. And they're both going more short, which is ultra rare. It's usually the financial houses and bullion banks on the other side of the same contract. No, they're both going net short, as I showed you on the commitment of traders chart. Look at this. Okay? And the price is still going up. That's astounding. The price is still going up. Well, let's look at American banks versus foreign banks. You guys know from a couple of weeks ago, I said in silver, this is a January bank participation report. I showed you December. And in December, for the first time, and God knows how long, U.S. banks went net long on COMEX and silver while the foreign banks were net short. Why would foreign banks want to be net short? Let me give you a clue. They want to be net short to bring the price down. Why? To get the silver. How do I know they're taking the silver? Well, wait until I show you registered stocks. That's really going to shock you. I think the foreign guys are in here shorting silver to get the physical out as cheaply as possible. I think that's what's happening. And I think they're pulling a lot of new demand through the supply chain to replenish silver stocks through the refiners. And that's why the refiners are so blocked up. They're max city. They are absolute max city. And I'll get to more on that in a moment. But here's the January bank participation report. We know in December, the U.S. banks went net long silver for the first time, and I don't even know how long. Did they do the same in January? Well, yes, they did. A little bit higher percentage. So we're going to take a look at silver. We're going to go down here to silver. COMEX silver, these numbers, this is net long for U.S. banks, and this is net short. They're net long, 16,146 contracts, and net short, 15,099. That percentage of net long inched up a little for the U.S. banks. The non-U.S. banks went 50,766 contracts short and only 9,577 long. So of the banks, the net short is still 65,000 to 25,000. So these swap dealers, the banks collectively are still net short silver, but the U.S. banks are more net long than they were last month by a sliver. See, the U.S. banks they're going long. They're saying, we see what silver's doing. we're going long. It's the foreign banks that are shorting. The foreign banks that are shorting. And then we have really high deliveries in January. January is not typically a big delivery month. How do I know that? Well, look at the amount of contracts in January. You only have 270 contracts left. The big trading month is in March. 100,000 contracts. Well, you have to have a bunch of contracts to get one of them delivered, right? If you only have 270 contracts left, and January is not typically a big delivery month for silver because you only get 6 big delivery months in silver a year. And it's March is the big one after December, not January. But despite that, they've managed to pull 8,561 contracts of 5,000 ounce silver off of the exchange in a typically a non-delivery month. And if you multiply 8,561 contracts, and each contract is 5,000 ounce silver, that's 42.8 million ounces of silver delivered in a typical non-delivery month. 42 million ounces of silver in a typical non-silver delivery month. And who's shorting silver? It's the foreign bank. The foreign banks want the silver. It's China, Russia, whoever. They're the ones that want the silver. They're shorting it to get it off on a non-delivery month, for crying out loud. And if you look at how that happened in silver, the first day they stood for 2,200, then 1168, then down here 1624 on the 7th, and it all adds up to a cumulative total so far of 8,561. And we got a couple of delivery days left, not many, okay? But we got a few left. We might get to 9,000 contract. We may get to 43, 44 million ounces. And what is considered a non-delivery month because there's not any open interest left. March is the big trading month. And what we saw was people bringing contracts forward into January. I've never in 16 years seen that at the level it was. Usually you push your contracts out because if you want a position and as the end of the month comes, you got to rotate out of your current month into the next month. It's a futures market. You're not looking back on price. You don't bring a futures contract back to you from March to January, but that's exactly what was happening. Why? To get the deliveries. And who's getting the deliveries? The foreign banks who are keeping the price down so they can get it cheaper. And despite them doing that, the price has gone straight up since freaking March. This is insanity. There's massive deliveries. Now, we're not running out of silver. People tell you we're out of silver. We're not yet, but we're being raided. The COMEX is being raided. And you want to know how I know that the COMEX is being raided? Well, it's because that they're taking the silver stocks. And I'm going to show you that. If I can get that come up, you guys are going to see that they're taking the silver stocks. And we're going to show that. Here we go real quick. Share silver stocks. Here we go. All right. So this is as of yesterday, which is the most recent available. Today's won't be available till tomorrow. Report date 1/21/26 of silver metal depository statistics. And I've highlighted the adjustments to inventory. There were 3 million ounces off of the Asahi depository that went from registered to eligible. That means it's not trading. It's not free float silver. Free float silver is what you can deliver on a contract. This eligible category here is not deliverable. The registered is, okay? So it's being moved to registered because somebody wanted it, claimed it, and they put it in eligible. Eligible means it's owned by somebody, and they're not allowing it to trade, okay? And a couple other depositories. We go down here, yet a net move of 3.7 million ounces of silver that's no longer liquid. We had over 119 million. Let me highlight this in red for you. We had over 119, well, maybe orange. We had over 119 million as of last week. Last week, 119 million ounces were in register that could be delivered. 3.7 million ounces came off. Why did 3.7 million ounces come off? Because people are in there taking the silver. Okay, do you get what's going on? Who's shorting the silver? It's not U.S. banks. The biggest shorters are the bullion banks I showed you on the COT report. And the biggest shorters out of those banks are who? Foreign banks. Foreign banks are shorting silver to keep the price down. And somebody's taking delivery. I'm guessing it's the foreign banks who want it. For what? They're foreign customers. The US COMEX is being rated for physical. Now there's still 116 million ounces and registered. And as long as that number is legitimate and not a complete fabrication and a lie, which we don't know, people are going to say it on social media. They're going to say it's a lie, it's a lie. And they could be true. We just don't know. We don't have that data to look at. I'm an auditor, a former auditor. I want to know what the data says, and I want to know about the integrity of the data. I could tell you what the data says. I don't know about the integrity right now. I can't tell you that. So what I can't tell you is if that 160 million ounces is actually free floating. But I can tell you that the data tells me that foreign banks are shorting the market and taking the silver off. That's apparently what it looks like to me. Now, what's going on anecdotally? I was talking to one of my mentors today for our bullion store. I run a national bullion store, as you guys know. You should know by now. And we've got about 20 other wholesalers, and we sell to about 30,000 customers. We're a fairly healthy business, and it's growing by leaps and bounds. I'm still trying to get more gold in the store. It's crazy. I talked to one of my mentors this morning. Here's what his supplier of planchettes told me, that they're now charging $3 over spot for those. More for a 3/9 fine planchet. A planchet is what you get before you do a coin. This is a final coin. Okay, this is a Kinesis coin. It's been stamped. I'm not going to show you the front because the coin we haven't debuted yet. Hint, we're going to have a new one in silver. That's a prototype. We're working on it. Those planchets, before they get stamped, went up $3 above spot. And I'm like, wait a minute. That's going to be hard for me to sell and make any money on that when my costs increased $3 an ounce. Why? Because refining, they're not completely out of silver, but refiners can't get them enough 3/9 fine pure. It's that supply chain I've been harping on for months, which is gobbled up and gooped up, and they can't get enough silver in there to be refined. Okay, and with this foreign people coming in and taking the refined, 3/9 1,000-ounce bars that you get 5 of them on a contract and taking delivery, they're taking the refined silver off of the industrial market. And our refiners in the US don't have enough capacity to refill it. And so people like me who make coins can't get the stock. The price is rising. Now, I can still go buy sub 3/9 silver, 90% constitutional scrap of various types off the market and have it refined. And thank God we have a refinery that we work with that's not at 100% capacity, and we reserve space. So I can still get it. Okay, but I have to go to this minter over here. Some of my other, mint options, and so not all of the refined silver is accounted for and is rising, but the prices are starting to rise. Okay, Rob, that was confusing. What does that mean? As I'm looking at the supply chain, most of the big refiners can't get enough silver out to replace silver that's being taken off our market, apparently to foreign bank account holders on the COMEX, which means foreign entities, more than likely. Why would you sign up with a foreign bank if you're in the US? You're going to sign up with the US bank, more than likely. So I can only surmise that 3/9 fine silver off the COMEX is being sucked off so fast that our refiners can't replace it. And what's happening is those refiners now are not going to be able to get gold and silver coins and bars to your dealer at the same price. Hence why the dealer prices are rising. And I looked yesterday, I haven't looked today, but I looked yesterday, and we're still looking at $7, $8 an ounce over spot on common silver bars and coins, private mint ones, the ones that don't typically have those premiums. But I can still buy silver off the street and have it refined. So we're not completely out of silver. There's still silver in the US. But the suckage from overseas, from foreign parties, is so strong that has completely locked up our supply chain. And that's why your prices on silver, your premiums have shot up, and not just on American Silver Eagles. Now, there are enough planchets. If the US Mint wanted to do more Silver Eagles, they could. Because I know some of the refiners have capacity, but they're running out. And, even the smaller refiners are starting to get demand. And that's what's happening. So silver is not unobtainium, but it's going to be really damn fast. And that physical demand is dragging that price up despite the best efforts of both the financial houses and the banks to suppress it. It's not only the banks now, the financial houses are trying to bring the price down because they think that it's not going to keep going. So they're dropping their longs. That puts short pressure on the market. Okay, despite them jumping in on the short side of the market, it's not slowing the price down. Physical is starting to take over. Physical demand is starting to take over. This doesn't, this has been going on for a while, and this is not normal on the US COMEX market. It is not normal. Okay, so we're not out yet, but I can see it. I see the supply chain because I deal with the whole thing. I deal with rough product and I deal with refined product, and I deal with companies in between. I'm not just an analyst. I do this on my everyday job, and it's starting to get really interesting. Making my $150 price prediction for silver in 2026 maybe look really darn conservative. I don't know what it's going to go to. This is ridiculous. By the time the video comes out, we may have hit 100 or get really damn close. And I said last week, I said we're really close to 100, and I was right. And it may be that premiums at your coin store go way up, and on your online dealer go way up because they can't get it replaced fast enough because people are sucking it off the COMEX, the big bars. That we can't get refined bars to cut and make coins and bars, so all the refiners are working overtime. That's what's going on right now. It's not unobtainium. It's not, we're not out of silver, but the demand is so strong that eventually, really soon, we may be. And then all of a sudden, that mining output that's been lagging demand for 5 years, that billion ounces I've been talking about for years, the Silver Institute report together with Metals Focus, saying that the mines have not been able to keep up with demand for 5 straight years in silver around the world. And the fact that the US supply chain is being completely drained of silver to foreign parties means we may come to a point at which silver goes limit up. What does that mean? It means that people don't have enough silver to give you. There's not enough supply to demand, so the price just keeps going straight up. It's already been doing that since March, effectively, and it may go straight up, but faster. It may accelerate. The price increases may accelerate here for a period of time until additional refining can be brought online and additional mine supply can be brought online. And Americans are still, the retail market is still net sellers. They're still selling their silver chains and their silverware and their silver whatever, their sterling and jewelry, 14, 18, 20, whatever. But eventually they're going to run out. And if we don't have mine supply, I don't know what silver is going to go to. I don't know what it's going to go to. There's no upper price limit because we have to have it. It's in everything. And this is why I want to do this video. And I've been saying we're not out of silver, and people have been killing me on social media, and we're not. I'm telling you the truth. I see the whole supply chain. We're not out yet. But damn if we're not getting real close. And damn if our refining cannot keep up. And damn if foreign parties are not sucking our silver out of our markets. So look, if you want to, I know I sell silver and people are going to say, you're just hyping it up. I'm not. I showed you the data. I showed it to you, and you can see the premiums on all the dealers. I'm not making this up. That we are having a massive worldwide run on silver, and I've been in 16 years. I have never seen it like this before. 17 years, actually. It's 2026. I'm now in year 17. Give myself credit for another year. I haven't seen it. Almost 2 decades. Never seen anything remotely like it. This is the beginning of Silver Squeeze 2.0. It's been the beginning for about 6 months to a year, but I mean, we're in Silver Squeeze 2.0. Silver Squeeze 1.0 was really a run on ETF silver that didn't result in a bankruptcy sort of condition and didn't result in a quadrupling of price in over 2 years. We've now had a quadrupling of price in 2 years. We're going on almost 5 times, and it's not stopping, and the physical is being demanded at record amounts around the world. Record amounts. This is the real Silver Squeeze, and we got a bit of time left, but I don't know how much. And the more that I do videos and the more you see the videos on social media and the posts, more people are going to start getting into it. And I'm telling you right now, if the American retail switches and stops selling their silver and starts buying, we may go out of stock within days from that. When all the dealers say they have no more silver, that probably means US retail got involved. And I don't know if they can bring on enough refining and mining in time to deal with that. And that's what's happening. Wow. I mean, wow. Big time stuff happening in silver. And fun stuff. Stay tuned. We're going to do more. Now, we've got Snowmageddon version 2 coming to us. I may not have power for the next few days because Texas is going to get it where I'm broadcasting from before the East Coast. And we're predicted to get temperatures in the low teens as far down as 10 degrees. And even though Texas has um, solidified their power grid, we've winterized most of our natural gas and all that, we're still susceptible to power lines being frozen and breaking. So we still do expect power outages, even though the grid has enough power. In fact, the grid has added so much freaking power, mostly for all the data centers being built here. We've added so much, we've added more power in the last few years than we've ever added before. So the power will be on the grid, okay? And a lot of it, natural gas, not the solar and the wind that's going to freeze up in these conditions. We have a lot of more natural gas. We have more nuclear, but the lines could freeze. So I may not have internet. So you may not hear from me for a few days on social media because when the internet goes out and the power goes out, so too do the cell towers. And you may not hear from me. So all of those of you in the path of this storm, please do the following things. Please go buy a generator if you don't have one and get either propane or gasoline and get enough stock of that. Get your candles, your lighters, your blankets, get extra food and extra water, and hole up with your family in one place so you can all be together. And where put all the generations of your household together so you can heat with space heaters one room, and survive in those conditions. Winterize your house, drip your faucets, wrap your pipes outside. I'm serious. This is going to be nasty. Do not go on a trip, on a long distance trip. Do not get on the highways unless you're fully prepared. Be careful. It's going to be nasty. And if you don't hear from me for a few days, I'll come back when the power comes on. At least you're going to have this video. God bless everybody. Everybody stay safe during the winter storms. And when we come back from the winter storms, we're going to see what the aftermath of this silver run this week is. We could be sitting at triple digit silver either by the time the video comes out or by the time the ice storm is over next week. This is crazy. This is the craziest silver market I've ever seen. It's a lot of fun, and we're getting real close to where we can't get silver. We can still get it. It's slow and it's pricey, but it may come to the point pretty soon where we can't get it. And damn, is that going to be crazy times. Till next time, Rob Keats with the Freedom Report.